So today we're going to go through Boohoo's interim results. There was some good stuff in there, but there was plenty of horrible stuff in there. And for me, this was a pretty poor update from Boohoo, and I'm going to point out a few of the negatives that I saw with it. And I know a lot of you guys that follow my channel are Boohoo shareholders, and personally for me, I'm a shareholder as well. But straight up, to be blunt, I was very disappointed with this stock and their interim results. You'll actually see from the share price that it's actually performing quite well, and we'll talk about why that share price is performing quite well. And then I'll be talking about when will I be buying, and will I potentially sell the stock now after this interim results that I'm disappointed with. So I hope you enjoyed the video as always, guys, and I am trying the new format again today, guys. I know a lot of you guys seem to enjoy it. I know there's a few suggestions about potentially having my laptop screen a little bit higher. Unfortunately, this is as high as my table goes, so I can't get it any higher. If I was, I'll have to buy a new table, which potentially could work, but not right now. But anyway, getting stuck onto Boohoo and their horrible update. So overall, yeah, I was disappointed. It was a lot worse than what I was hoping for, and when we look into the bad stuff, you'll see a few of them points here. There was a few positives though. The positives didn't outweigh the negatives, but we'll get into a few of the positive stuff that was in there. So a few of this will be from their webcast that they held, and a few points that was made on there. At last, there was some news about Debenhams. Debenhams has seemed to be gone really quiet over the last 12 months or 18 months since they made that acquisition. And we heard about the potential expansion into beauty, how that's going to make such a good amounts of revenue for the for the business, potentially push into higher gross margins because it's a higher gross margin business. And it all went silent. Well, actually, in this webcast, we actually had a bit more detail on what's going on with the Debenhams side of the business, the launching of it, the brands that are coming back onto Debenhams, and the long-term aims to get that Debenhams back to a point where it contributes good amounts of revenue and profitability to the business of Boohoo. So we had a few more details put in there. It's worth going and checking the full webcast out for that full information there. We got a few more details about the Pretty Little Thing and the resale site that they're launching. Obviously, we've known about that for a little while, that that's going to be launching. There was also suggestions that the wholesale market in Australia was recovering really well, and that is because the shipping times on that part of the business has been massively reduced. And they use that as an example of what can happen when a lot of the pressures at the moment on the business, which one of them has been the delay in the shipping issues at the moment, or how long it takes to ship items, and that could return to good amounts of growth there. And another positive that I noticed that was talked about in the investor webcast was the return rates. So many of you guys will know Boohoo has been hit by a mass amounts of explosion of return rates, and that's been hitting margins quite a bit. They said that they have started to introduce return rates, and they've seen no slowdown of sales from that fee starting to be introduced of return rates. So that's good that people are still coming onto the Boohoo website, shopping, and the return rates are paying for potential return rates. It hasn't really affected sales, which is a really good positive. And there's also news about the automation in the Sheffield distribution centre, which went live in September and is also expected to save money, which is great. And the US distribution centre is on track to go live in the first half of 2023 and 2024 financial year, supporting significant growth and improvement in the consumer proposition from a reduction of international delivery times, which has really been affecting the US side of the business's delivery time. So that's really key for when that gets online as well. And overall, those were pretty much the positives to take away from these interim results. Now on to the negatives. A lot of negatives was the financial side of the business. Unfortunately, the financial side of the business declined way more than what I was expecting to see. And it's also very clear that Boohoo are actually very terrible at guiding for the next quarter, because we've seen plenty of times, like the first kind of when we saw from ASOS, and they were saying we're seeing an environment here which is massively deteriorating, and Boohoo had their trading update and they were like, oh yeah, absolutely, you know, everything's going absolutely fine. And ASOS got hit on the share price, but Boohoo held up quite okay. They were saying everything's okay. And then within a few months' time, we saw Boohoo basically come out with what ASOS said was happening a little bit later than what it should have done. And that was Boohoo being very poor on their guidance side of it. And same again, we saw Boohoo be once again very poor on the guidance side of it. If we flick back to the last financials, it said that UK sales improved month on month in the period and returned to net sales growth in May in the UK. And then the guidance was to be good revenue growth or single digit growth in financial year 2023, and adjusted EBITDA margins to be expected between 4% and 7%. And then going on the recent data, when we saw them saying that UK growth had returned, We see that UK revenues declined 4%, softening through the second quarter as the inflationary pressures increased and consumer demand appears to have been impacted by the cost of living pressures. So once again, we came from one end extreme to the other end, where we saw them suggesting that UK growth was improving month on month on month, and then when it actually came around to the interim results, they went, actually it got worse as it went on. So we went from, once again, Boohoo being very poor at guiding numbers, from saying things were very positive to things are very negative. And this has been a very common theme in the last 12 months with Boohoo, is that the guidance has been very poor, and once again that was very disappointing to see, because one of the markets we want to see being strong is the UK market. I'm very confident the US market will come back once we get the new warehouse going and the shipping issues sorted, but this was very poor to see from Boohoo. And like we said, we saw revenue decline 10%. We saw gross profit as well decline 13%. We saw adjusted EBITDA as well decline 58%. And we saw in the outlook as well, they said that because of the impacts on the macroeconomic and consumer backdrop, the revenues in the first half are expectations for the similar rate of revenue declines to persist for the remainder of the financial year if these conditions continue. It also said that they anticipate that the adjusted EBITDA margins are now also going to drop between 3 to 5%, and that's from previously guided of 4% to 7%. So what we're seeing here is Boohoo actually came out with revenue that was really disappointing, which was massive away from the outlook that was given and the suggestion that was given. We're seeing revenue miss a huge amount, and looks like it's going to be a very poor year for revenue growth. We're seeing gross margins continue to get hit as well, and adjusted EBITDA margins being massively hit as well. And overall, there should have been more suggestion here, because Boohoo are nowhere near going to be hitting the guidance of what I had and what analyst expectations are having at the moment. And that's a massive slump in the sales at the moment for Boohoo, and the numbered financial delivery of those numbers were very poor. So overall, the financial numbers, like I said, were probably one of the worst, way below my expectations, and very disappointing. So given all that, there was some okay stuff in here, but financially they were very much underachieving where we thought they were going to be. Very quickly, let's just look at what the share price did today. And you'll be able to see here, today the share price was up nearly 8% on the day. So why has Boohoo, okay, there's some good stuff in there, but the bad stuff very much outweighed it. There was very poor revenue sales performance, especially in the UK market, which should have been the strongest market. We're seeing margins get hit massively, the loss is increasing as well. Why is the share price having such a good day? Shouldn't the share price be reflecting a company that just basically came out with a profit warning? Shouldn't that stock be sinking down? Well, the thing is, when you look at Boohoo, it's currently a 500 million market cap. And when you look at this business as well, it's already incredibly shorted. I believe it is the most shorted UK stock on the market right now. And what you have with Boohoo is pretty much every investor or a lot of the hedge funds have already priced this in with Boohoo. People have already priced in that the company is now a company that loses money. It's now a company that has gross margins impact. It's now a business that has revenue declining. Boohoo is now a company priced like it's heading for bankruptcy, or that it's a company that's very financially performing poorly. And this is where Boohoo is at. So the market was not really that shocked to see so much poor financials. And because the financials just weren't really terrible, or there was enough for people to kind of take a risk on there, or because the shorts have basically controlled this stock, that's why there wasn't really that much change in the stock right now. And that's the key point to be looking at Boohoo and go, that's how much negativity is priced in this stock. It's priced as though it's not going to go back to a growth company, or it's ever going to be recovering. So I guess that kind of leads us on to the next point is, will I buy or will I sell my stock? Well, at the moment, will I buy? I can't buy at the moment because there's a lot of this going on. The key thing I want to be doing in this bear market is making sure pretty much every single stock is having the share price go like this. My key thing is to be staring at companies that fundamentally aren't reflecting the share price, and fundamentally the financials are going like this and moving in an uptrend, because some of those stocks that are financially performing absolutely amazing are still getting dragged down the market with share prices. And I really want to be focused on the companies that are financially performing absolutely amazing and getting dragged down on the share price. Unfortunately for Boohoo, as the share price goes down, the financials have been going down with it as well. Probably not as much as the share price justifies. As you can see here, it's valued now that it's basically never going to go back to growth. It's not probably going to put anywhere close to the profit margins it used to do in, and it's very much valued at a very low level right now. However, the financials haven't moved in a way that I am happy with, and I need to see improvement there. And I can basically wait. The share price is not going to go anywhere until these fundamentals really do improve. And you know what? Even if I miss out on the stock being at 39p, the worst case scenario, I'm still going to be buying that at 60p. And that's still going to be a pretty good level that I'll be buying that. So I don't want to be buying Boohoo until the fundamental side of the story improves. Now, will I sell? I won't be selling Boohoo either. So I'm going to be in a position where I'm going to be holding. And why will I not sell? Why will I not sell if the fundamentals are deteriorating in this business? Well, unfortunately, it's not a company issue. It's not Boohoo being a bad company or there's something going wrong in the business. You just have to look at pretty much every company in this industry. You pretty much just have to look at a company that uses logistic, shipping, the inflationary pressures. There's so many companies very similar to Boohoo that are getting affected by exactly the same issues right now. It would be a total different story where we see the economy improving, sales improving. We start seeing companies like ASOS, and ASOS are doing well, and Boohoo is still down here. Then it's an issue where you go, okay, a lot of the pressures at the moment have kind of gone. But until that point, I think Boohoo still has a good business. I think the US part of the business still has insane growth once they get that distribution part of the business up at the moment. And without doubt, there's still a lot of issues in the world at the moment. And I can't say Boohoo's a terrible company when there's hundreds of companies getting affected by the same issue that Boohoo are having. So for me, I have to see where Boohoo go in the next kind of couple of months. And when these pressures are eased, where is Boohoo as a business? Is that story where, okay, now the fundamentals are ticking upwards and I go, you know, that's a decent company, I can carry on buying it. At the same time, there's no point me selling it right now. Boohoo is valued at a company that is going to not grow anymore or have very slim profit margins. And there's no point me selling at those sort of levels, because when these issues resolve, I think there's a good chance Boohoo go back to decent growth and good amounts of profit. I need to see that happen first to give me confidence to buy it. But I very much think that, okay, I can't judge this business until I start seeing us move out this period, and then I see other companies doing well and Boohoo are still in this situation. Then I'll be like, okay, that's a bit worrying. But right now, there's so many businesses that are having this hit that I can't judge Boohoo on the situation, because there's so much of it going on in the world right now. So for me, I can't buy because I need to see the fundamentals improve, but I can't sell either because the level that Boohoo's valued at the moment, I think, is extremely cheap. And you wait, if we do have the business start moving back into a positive direction when these pressures go, the share price will be a lot higher than where it is right now. So yeah, overall there were some good points in here, but I thought it was a very, very poor quarter from Boohoo. But it was very interesting to see that's where it's valued at right now, and the market wasn't shocked to see these results, which shows you the valuation of Boohoo right now. So yeah, that's where I'm at the moment. One that I'm going to sit back on and watch and judge it in a situation where we don't have these pressures like the shipping issues and the inflationary pressures at the moment, and then we'll see where we're at with it at the moment anyway. So I hope you enjoyed the video, guys, and I'll catch you in a bit.